We've been seeing some weakening on the Naira as strong demand for the greenback persists. Run us through the factors at play here, because most oil companies operating in the country sell dollars around the end of the month to obtain Naira for local obligations. And it seems that that's not doing enough this time round to balance dollar demand.
Yeah, hi Alishia, good morning. Yes, you're very right. Most oil companies sell funds, not just at the end of the month. We have seen an uptick in the volume of sales from oil companies lately. But the disturbing thing is that demand has remained high. And the problem is, people are worried about the stability, the potential stability of Naira against the greenback. But I think some of these worries are unfounded, because the CBN governor has come out to say strongly that the CBN is willing and able to defend Naira. And it's not difficult to see where Naira has been facing these pressures. Lately, we have seen an uptake in exit of foreign investors from the Nigerian capital market. Most of these payments are being repatriated in foreign currency, so that's one aspect that's putting up demand in the foreign exchange market. We have also seen an uptake in prices of commodities. Nigeria is an import-dependent nation. Most of the goods we import here, just like many other countries, come from China. There has been increasing inflation in China, so the average size of dollar you need to import the same size of good has increased. So all these things are putting a lot of pressure in foreign currency. And one other factor, the crude oil prices, which everybody thinks will be putting Nigeria in good time, letting us smile to the bank, is also, on the other hand, playing aggressively against us, because most of our refineries are not producing optimally, and there are tons of cars and tons of people in Nigeria who use refined petroleum products.
Of course, also being highlighted on that front, Emeka, sorry to interrupt, but is that the rise in international crude oil prices may not yet be benefiting Nigeria, because it's locked into long-term agreements. So to what extent is this coming to bear, and what impact do you see these long-term agreements having moving forward?
Yes, that is a very, very important factor, and that's also why it is so important that we get the petroleum industrial bill sorted out, because it will change the contract features and the pricing structures of crude oil prices. As the crude oil prices are increasing, so also are the prices of refined products. And we import almost entirely everything we need here, from kerosene to gasoline to diesel. And we have seen serious uptake in the prices of these products. So as we are earning a little more on the crude side, we're also spending so much more to pay for these petroleum products. So you see, unless probably there is huge increase in the volume of production, where the consumption of refined product remains steady, we may not really see that kind of boost everybody is expecting to see in the foreign reserves because of the increase in crude oil prices. So these things take time. And because there's not sufficient appreciation of all these factors that are pushing demand in the foreign exchange market, there seems to be like a panic, and that's putting a lot of pressure on Naira.
With that being the case, Emeka, I mean, we haven't seen this money flow through an increasing oil reserves. The central bank has, of course, as you touched on, been supplying dollars to keep the Naira in a range of roughly between 150 and 155 in the interbank market since 2009. Bearing in mind that we've got this decline in Nigeria's foreign reserves, I mean, what's your view on central bank intervention right now? Because, of course, we have seen the IMF pretty critical.
Yes, I strongly, agree with the central governor in all his speeches and responses to the IMF criticism. The IMF, there are pros and cons on both sides of the argument, because the typical thing you do when your reserves are being depleted is to protect the reserves. And the first line of action is to devalue your currency. But just like the governor of CBN has said, Nigeria is an import-dependent nation. We have inflation increasing. If you play with the exchange rate, we are actually going to shoot ourselves on the foot. The inflation will run out of control. So what do you want to do? Protect your reserves at the current levels, or allow some depletion to protect the currency, which I think, if you ask me, will have a much more negative impact if we play with the exchange rate now, when we're actually working hard at keeping inflation in control.
Emeka, looking at that trading range then, I mean, then are you still anticipating the unit to stay within that 150 to 155 trading range?
Yeah. I think so very strongly, and CBN has also come to say they will, and I believe strongly they can. You know, we have to separate these things and look at, you know, from two perspectives. First of all is that if we appreciate and understand what has put the pressure on Nigeria, and then the secondly is, do CBN have the capacity and the willingness to defend the Naira? They have said they will. I believe them. I believe they have the capacity to defend the Naira. And so we just have to be a little bit patient, because what happens is that when the demand is being stockpiled and the reserves are dropping, people get worried. We see a lot of front loading coming. Guys that have LCs and bills to pay in 2 or 3 months bring it to market now. So there's that initial impact. But we have also seen CBN take very, very strong action in this market to protect the Naira. So if demand continues to go up, I will not be surprised to see CBN increase the volume of sales they bring to market.